Hello, everyone. Welcome back to the Ever Forward Mindset Podcast. I'm your host, Michael Rebella. I'm a 20-year-old entrepreneur who forewent the college path and chose entrepreneurship instead. My goal has always been to retire my mother, and is the reason why I'm doing this business, and to help everyday Americans like her to learn about what I do in multifamily syndications and how to help invest in my company and other companies in the future. And today I'm talking with Alexander Green, Chief Investment Strategist at the Oxford Club, one of the top investment research networks in the country. Alexander has spent decades helping people grow their money to start the smart way and to focus on what really matters in life. And what I love about your message, Alex, is that you remind us that people should focus on that it's not just about money, but there's more purpose to life. And it's not just money. There's a bigger purpose than that. And of course, it's an honor to have you on the show. Thank you for joining.
Thank you so much for having me, Michael.
Of course, the pleasure is mine. But I know you're on a big time crunch. I know you're going to be speaking soon. So let's dive into the questions really quick.
Okay.
So, Alex, you have been around the markets for a long time. You've seen trends come and go as they please. So, what did your time on Wall Street tell you and show you about real wealth and what it actually means? And can you give us some examples?
Wow, great question, Michael. I actually started 40 years ago, 1985. I started in the money management business, and I hardly knew a stock from a bond. I got my securities license, and I began managing money by giving people my firm's recommendations. And unfortunately, we'd make money, we'd lose money, we'd make money, we'd lose money. And I got so frustrated, I started following the best investors at the time. This is 40 years ago. And Warren Buffett was running Berkshire Hathaway then, and Peter Lynch was the world-beating manager of the Fidelity Magellan Fund, and John Templeton with the Templeton Growth Fund. And I went to these guys trying to understand how they knew when to get in the market and when to get out. And that wasn't any part at all of their success. What they knew how to do was two things. One, they knew how to recognize a company that was selling for less than what it was worth and sell it when the market recognized that value. And the second thing, which I made part of my own philosophy, is they had an optimism about the future that simply didn't have an off switch. And the reason that impresses me to this day is when I first learned about this, I thought, how can they be so naive? How can they be so misinformed about all the problems in the world and still be world beaters? And of course, the reality is there are all kinds of problems in the world, but most of the long-term trends are positive. People are living longer, our standards of living have never been higher, household income and net worth has never been greater, educational attainment has never been greater. There's more people with high school diplomas and some college degrees and PhDs and advanced degrees. Air and water quality has been getting better for decades. There are all these ways that the world is getting better, and these guys recognized it and were capitalizing on it, and most people weren't even recognizing it, so they didn't capitalize on it at all. So I made their philosophy my philosophy in the money management firm for 16 years, and then, since I was financially independent, I left that firm, the firm I was with at the time, and began writing full-time for the Oxford Club, and that was 24 years ago.
Wow. You know, Alex, I just want to touch in on that a little bit of you following the top-notch investors. Regardless of 40 years ago, there's still top 1% players, like investors, like, for example, you, that are at the top just talking about what you're doing. And people should be following that instead of like their financial advisor telling them, invest in this particular stock, because there's so many different avenues out there, very similar to what I'm doing. I could have invested in the stock market. I could have been a day trader. I could have pulled all my resources together and done day trading and everything, different options, but I chose syndication because it's the unorthodox path. Right. It's a different route. And I heard a lot of people, do real estate, especially big players like, for example, Robert Kiyosaki, Ken McElroy, Rod Khleif, a lot of those people that I follow. And I go, well, how could someone like me at 20 years old do that? And I figured that leveraging your network and talking to various amount of speakers and big players, that you could build teams, partnerships, syndicate money. It's really a cool thing, but I won't go down that rabbit hole because I know I'm pretty prone to do that. But to my next question, a lot of young people like my age and some of the attendees here, they want the get-rich-quick scheme. They want something to get rich like right now, fast. Right. There's no delayed gratification. They just want it now. For example, like crypto or day trading, examples like that. But in your book, The Gone Fishin' Portfolio, and before I dive into that, isn't there another book that you told me about that you want to talk about?
Yeah, I've got a brand new book out called The American Dream, Why It's Still Alive and How to Achieve It. And I started writing the book last year because I saw the polls that showed that belief in the American dream was at an all-time low. And in fact, the Wall Street Journal came out with a new poll just a couple of months ago that shows that only 30% of Americans still believe the American dream is attainable. And that means 70% don't. And that just it's shocking for me to think that. I say that in part because when I was 20 years old, like you are, I had no money, no skills, no prospects, no network, and and no health insurance, no savings, nothing, and no inheritance, no family connections. And I still had this unshakable conviction that somehow, some way, I would achieve the dream. There was no reason to think that, but I think that believing that it's possible is a huge part of it. Because think about it, Michael, we don't even bother striving or sacrificing for something we don't believe is realistic or even possible. So I think a big part of it is that people just don't believe the American dream still exists, but it does. It's never been simpler for people to become wealthy than it is today. Now, simple doesn't mean easy. I give the example of weight loss. It's simple. Either every day you either burn more calories than you take in, or you take in more calories than you burn. Simple. Easy? No. But the same thing is true of getting wealthy. For people who work and save and invest and compound their money, it's very straightforward, but they don't know what to do. Their parents didn't teach them, the schools didn't teach them, and they just feel stuck because they don't know what to do. So I'm trying to fill that role. In my new book, I'm happy to say, it's not only a #1 bestseller on Amazon, but the #1 book on Amazon in wealth management. And I think it's because it resonates with people. They want the optimism, they want the inspiration, and in the book I show them very specifically what they need to do to reach their most important goals.
Wow. Well, I appreciate you writing a second book because your Gone Fishing portfolio has been a hit, especially for someone like me trying to read it. Because going back to our question, a lot of people want to get the get rich quick scheme. Some people think, oh, the American dream is dead. I need to do something else. But no, you're right. It's alive, but nobody talks about it. So it's almost like people like you and I have to resurrect it, bring it back into the limelight to go, hey, no, it's still here.
Right.
We just need to take action on it, maybe a different route,
right,
but it's still there. So thank you so much for sharing that. And for everyone listening, please go check it out on Amazon. Follow Alexander Green on social media and look him up on Google. And then, start learning from the best. But anyways, in your book, to go back to the Gone Fishing portfolio, you talk about being patient and thinking long-term, long road ahead, the business plan. So to kind of go back to your shoes and my shoes a little bit, for someone in their 20s just starting out and trying to figure their way in life, how can they do that today? How can they build long, sustaining wealth for them?
Okay, great question, Michael. And I want to bring up something. I saw Jeff Bezos interviewing Warren Buffett not long ago, and he said, Warren, you've been trying to show people for 60 years the path to wealth. Why don't people listen to you? And Warren said, because nobody wants to get rich slowly. They all want to get rich yesterday. And Leonardo da Vinci famously said, "He who would be rich in a day will be hanged in a year." and that's what happens to people in the markets. They start speculating on meme stocks and crypto and penny stocks and options and futures and all kinds of things, and they end up just getting nothing but an expensive education. And I try to impress upon people, if you want to get wealthy, you don't want to treat your money like chips in a poker game. You want to do something practical, structured, fundamental. And the idea behind the Gone Fishing portfolio, it's very straightforward. I recommend 10 different asset classes, and I suggest that you use 10 different Vanguard funds to represent those asset classes. And all you do is plunk your money in there, and then once a year, you take 20 minutes to rebalance the portfolio to bring all the percentages back to what they were initially. And that's all you do. The rest of the time, you're encouraged to go fishing or play golf or travel or whatever you want to do. But the idea is, if you want to trade stocks, great. I'd like to trade stocks. But don't take all your money in trade stocks. Your serious money needs to be handled in a serious way, and then you build on that with trading strategies, the occasional speculation, and that's fine. But don't just again treat your money like chips in a poker game, because that's not likely to work out.
Interesting. Thank you so much for sharing that experience. And it's funny how you talk about diversification and managing that every once in a while, because people will throw their money into CD accounts. I was a victim of this, and just like, it'll grow. don't have to worry about it.
Not very quickly.
No, not very efficiently either. And especially for me, someone who's doing real estate investments, diversification is key. Diversifying your portfolio. Don't just stick with, put your eggs in one basket and don't take all your poker chips, right? You want to spread it out evenly, almost like a strategy.
Right.
So thank you for sharing that. But since we've been talking about business, I kind of want to shift to something a little different. Talk about mindset, what it really takes to get into that mode where it's like, okay, I need to do something different. So you often talk about gratitude and mindset. Things you usually don't hear from finance experts, usually just finance and that's it. But you are different than the rest. So how do those people, like in Middle America, those that want to diversify their portfolios, how can they help or stay successful and grounded at the same time when it comes to both finance or business or just life in general? How do they stay grounded with that?
Well, I think the key to gratitude is first of all realizing how incredibly fortunate you were to be born in the United States of America or some other Western country, Canada, Europe, whatever. And in the modern era, 200 years ago, most people lived at the present day standard of living of Bangladesh. So you were very fortunate to be born where you were, when you were. And remember that for 99.9% of human history, people struggled to survive. It was to stay warm, to stay fed, to stay safe was an adventure and a risk. And even after the advent of agriculture and civilization, people didn't have any freedom. They were ruled over by strongmen or priests or kings. And we have so many advantages to live in a free country with a capitalistic system. And one of the reasons they should be grateful is capitalism is the greatest wealth creator and anti-poverty program of all time. And people don't understand capitalism. Capitalism says you can have anything you want if you just provide enough other people what they want. And yet instead, in school, they taught that we live under this unfortunate economic system called capitalism that's based on greed and selfishness and exploitation. And I tell you what, if you take 1 minute and think about it, you see what a mischaracterization that is. For example, let's just say I'm the greediest person on earth. No one is going to pay me a dime unless I can provide them with some product, some service, or some labor that they're voluntarily willing to pay money for. So being greedy doesn't get me anything. Selfish, okay, we're all self-interested, but you don't get rich by thinking about yourself. You get rich by thinking about other people. What do they want? What do they need? And how can I get it to them better, faster, cheaper, make it longer lasting? Exploitation, again, if you don't want to work for a company, you don't have to work for them. If you don't like the pay and benefits, don't work there. If you don't want to sell to them, don't sell to them. If you don't want to buy from them, don't. If you don't want to own their shares, don't. So where is the exploitation in that? There is none. And so there's this complete mischaracterization of how capitalism works. And the complaint is, well, yeah, capitalism is great if you have the capital. It's never been easier to be an investor than it is today. There are no investment minimums at most brokerage firms and mutual funds. Now, you can put $1 in the market and get started, $1. Commissions are zero. That's unthinkable. Spreads have never been thinner. Executions have never been faster. Getting research has never been easier. Monitoring your portfolio has never been easier. We are living in a golden age for investors, and people walk around going, the little guy doesn't have a chance. No, the little guy has never had a better chance. They just have to wake up and understand what's going on. So I think a lot of these people who want to be wealthy, but they feel stuck, they just don't realize the opportunity that's sitting right in front of them. If they wake up to it, they would be full of gratitude, as you put it.
That is such an awesome way of putting it. And I love the mindset that you take from people like Brian Tracy and Zig Ziglar. You can get anything you want in life as long as you help other people get what they want.
It's funny you said Zig Ziglar. When I was in sales starting out, Zig Ziglar used to say, it's not your aptitude, it's your attitude that determines your altitude. And I've never forgotten that little saying, but it's so true. It's your attitude.
Yeah, absolutely. And it's that attitude that can change the course of your life and the trajectory of your finance. And not just the people you affect, your circle. Almost like the Mask of Zorro, your circle gets smaller the more you grow.
Right.
I watch that movie frequently. It's like, that's interesting. But I know you're on a time crunch. I won't take up too much of your time. But for our final question, if you could give one piece of advice for people that are just starting out on their next financial track, maybe a young person like me who wants to help their family like I do, what is one lesson or example you would share with either someone like me or the general audience that you would recommend someone to just do that one thing just starting out?
Okay, that's a great question, Michael, and here's my answer. Let's just say that you and I are two people who earn exactly the median income in the United States, which is $80,000 a year. Maybe you make a little more, a little less, it doesn't matter. If, let's just say that you, every month, save $190, that's less than 3% of your paycheck, okay? And you put it in an S&P 500 index fund, and that money earns no more than the long-term return of the S&P, 10% a year. If you do that, at the end of the year, you're gonna have some savings. I've spent all the money I make, I'm gonna have nothing. In 10 years, you're gonna have about $150,000, I'm gonna have nothing. In 20 years, you're gonna have $250,000, I'm gonna have nothing. In 40 years, you're gonna have $1 million, just saving $190 a month and earning a 10% return. You're gonna have $1 million, and if you did it in a Roth IRA, where the money not only compounds tax deferred, but you can take it out of the account tax-free, you are a millionaire who doesn't owe any taxes on the money. It took $190 a month, which is the beer money, the going out money for most young people. So what I'm saying is you don't have to do something incredibly smart, incredibly sophisticated. Just get started saving and investing. Put a little bit of money aside every month and then go out and have fun. You don't have to live like a monk. Go, have some balance, spend a lot of money on the things that you want and you need, but spend some money also, not spend, but invest some money each month. Do it regularly, do it consistently, and you will have a seven-figure net worth with enough time.
Wow. Alex, thank you so much for sharing that. And I preach that to my friends all the time. It's like, what are you doing? Stop buying the new iPhone and the new Jordans and everything. Put some money aside. Because eventually you're going to look at that account one day and go, wow, I was able to do that. Like, there's so many, it's like right in front of us, but we're so naive and so self-centered to think like, we could just do this one little thing each day.
I'll give you an example. Fidelity Investments did a money mindset survey, and among 18 to 41-year-olds, 71% said, they asked them, would you be willing to make changes to your current lifestyle now in order to save for the future? 71% said no. So if they're not willing to do that, the American dream is not an entitlement. You don't go to a government office to collect your American dream. It's an achievement. You have to work toward it. And you know what? If you look at it as an enjoyable challenge, instead of saying like, oh gosh, I gotta save, I gotta budget, I gotta invest. No, it's something you get to do. And it's something that I think is really not just you should do, but should be responsibility. Could everybody get by on $190 less a month by hook or by crook? Of course they could. So make a small sacrifice and then buy that iPhone, take that trip, whatever. But save first. Save first and then spend what's left over, and you'll be right on track the entire time.
Well, there you go, ladies and gentlemen. You heard it from the best of the best. And of course, Alex, this has been some great conversations. I really appreciate it. And thank you for coming on to the show and just talking about your experience, mindset, and not only that, plugging your book, The Gone Fishing Portfolio, and the new one that you want that you're about to release, The American Dream. So for those that are listening, please go follow Alexander Green on social media, along with on Amazon for his newest releases. And please, for the love of God, get The Gone Fishing Portfolio. You need to read it because that's where all the answers lie. And for everyone listening, thank you so much. And I hope you get a lot of value out of this. Build yourself better and bigger every day. Live better, live bigger. Always move yourself ever forward. And Alex, it was a pleasure. Thank you so much.
Thanks so much for having me. I'd love to come back and do it again.
Will do. Thank you.
All right. Thanks.